Thank you, Amy. I trust you can hear me.
Looks good.
Okay. Obviously, recent days in the gold market have been quite volatile. We still believe that the overall scenario remains positive for gold, and we basically think that share price dips simply represent good buying opportunities. The Ramelius story is, as much as anything, an Australian gold growth story, and it's this growth journey that I want to focus on today. Do make some forward-looking statements, and we do rely on our in-house competent persons to provide the information on which we deliver on. In terms of the corporate summary, you can see the robustness of the balance sheet. Last time we reported a net cash, it was 205 million. Our institutional shareholder representation now is up over 60% and has been a work in progress for some time, along with broker coverage, which is now up to 6, increased significantly from recent times. Our production for FY20 was 230,000 ounces at a very competitive 1164 all-in sustaining cost, that's Aussie, and we're guiding this year for 270,000 ounces at a midpoint all-in sustaining cost, slightly higher at 1280. Experienced and loyal board and management team who have obviously helped deliver year-on-year consistent results. FY20 was a record year for the company. That 230,000 ounces was record production. Our net profit was up some over 400% on the previous year at 113.4 million. And our share price performance, as you can see on the graph on the left, 176% share price appreciation was best in our peer group. That enabled us to double our dividend to 2 cents from the 1 cent dividend paid a year prior. And late last month, we entered the ASX 200 index as a result. In terms of safety and ESG, entering the ASX 200 requires increased focus. It's not that we weren't effectively doing all this stuff. We obviously have to make sure that we're letting people know what we're doing. In terms of safety, our TRIFR is a little higher than we would like, but the downward trend we've seen over the last year or two is encouraging. In terms of ESG, our business, as I mentioned, is robust. We've forecast entering the ASX 200 and have set up a new committee at the board level, Risk and Sustainability Committee, to be ahead of the game in that respect. Our people, they're always important, but in times of COVID, even more important, and we look to be a place where people want to work. Our communities, and they're generally very close to the operations that we run. We look to be involved both directly and indirectly, contributing to the welfare and well-being of those communities. And in terms of environment, we always look to minimise our impact on the environment through our operations, and I have one very good example later in the presentation to show you there. In terms of the growth story, it's really been about production growth. 21.5% year-on-year production growth since 2015, from around 85,000 ounces to the 230,000 ounces we posted last year, with a further 17% forecast to take us to 270,000 ounces this year. And you can see that the yellow columns on the chart. In terms of our cost performance, has been very consistent and very flat, which is very nice to see. It's the orange line, hasn't varied by any more than 4%. And what that's meant with increasing gold prices, obviously expanding margins from in the region of 20% back in 2015 to over 40% last year. In terms of growth of reserves and resources, we've accompanied our production growth with growth in this area. The columns represent resources and the line is reserves. And you can see, especially in the last 2 or 3 years, a significant acceleration in the growth in this area. Some shareholders, maybe investors, may be surprised to know that our growth has come probably about 50% from exploration and 50% from acquisition, rather than the notion that it's all come from acquisition. Our mine plans are derived from these reserves and resources. In fact, a very high percentage. We're only using some 12% of inferred resources in our mine plan, albeit our conversion rate of reserve to resource at 23% is lower than we would like. And we have a number of mining studies and a number of initiatives underway this year to improve that resource to reserve conversion. Before I look at the life of mine, I have to touch on FY21. We have a strong track record of delivering quarter on quarter, and we had a very good start and maintained momentum into 21 from an excellent finish to FY20 with 71,000 ounces, again at a $1,240 an ounce all-in sustaining cost. I mentioned our guidance is 260 to 280,000 ounces, but this year we look to be reaping the benefits of fairly significant capital expenditure in FY20, notwithstanding the Penny project, which I'll come to later. Our capex for FY21 is approximately $20 million below that of FY20. The only number that's gone up from FY20 to 21 is our exploration has gone from around 25 million to closer to 30 million, justified by our acquisition of the Penny project, so largely due to Penny. We look to be very cash generative through this year, and to give you an indication, the last 2 quarters, our underlying cash generation has been in the order of 120 million over those 2 quarters. A life of mine plan put out in June of 1.45 million ounces was a 34% increase from a year prior. It's a simplified diagram where Mount Magnet is in yellow, Penny is in the orangey color because it's associated and will be trucked to Mount Magnet, and Edna May and its associated operations is in blue. The main contributors to the increase year on year has been at Eridanus at Mount Magnet, the stage 2 open pit, and an initial underground below that pit, and obviously the acquisition of the Penny project. And in terms of addressing a dip in production at Mount Magnet in FY22, our early opportunities appear to be extension of the the Vivian operation, which currently is due to cease in October of next year, and also earlier production from Penny, which we have already flagged the possibility of bringing that forward in a more significant way into FY22 rather than the 5,000 ounces only that's currently forecast in that year. In terms of our mine plan details, I won't go into all the details, but it basically covers 6 to 8 years. Over the full 8 years, years 6 to 8 include low-grade stocks. So your all-in sustaining cost across the full 8 years is closer to $1,300 an ounce as a midpoint. If you look at the first 5 years where you have the mill full of high-grade material, our all-in sustaining cost is closer to $1,200, which is a very competitive number. You'll see the capex there provided for all of the projects. Eridanus, Tampia, Penny, Morningstar and Saturn are all included, and exploration is designed to deliver a rolling plan and the mine life extensions. We believe it's a detailed plan that provides excellent visibility, predictability and transparency within the Ramelius business. Quickly on our project locations, most people will be aware that the 2 production centres are Mount Magnet, 600 k's northeast of Perth, and Edna May about halfway between Perth and Kalgoorlie in Western Australia, and they are supplemented by high-grade assets that we truck into those production centres. We're fortunate that typically our production centres and remote assets also are located close to major regional centres and road infrastructure, and more often than not we're hauling on sealed bitumen roads, which obviously helps with our trucking costs. At Mount Magnet, you're looking at a 5 kilometre by 5 kilometre aerial photo with the township on the bottom right and the mill in the top centre. It's been responsible for 6 million plus ounces of production. The Cosmos area down the bottom left is where a lot of the mining is happening now, where historically it was closer to the mill in the Galaxy mine area. The Penny project and the Vivian project will be are being trucked into the processing plant, which is a 2 million tonne throughput plant. We're also having a look at the option of going to 2.4 million tonnes. Further to the south at Edna May, we have a much larger land holding from Marda to Edna May, all the way 130 k's from Edna May down to the bottom of the map, which is where Hollerton is, and further to the west, Tampia. At Edna May itself, underground operations are in full production along with the Greenfinch open pit, which is right next to the original stage 2 pit. They're at full production and they're responsible for the significant increase in production that you saw in Q1 out of Edna May. Marta is in full swing, and I've got one slide on that. It's 170 kilometres to the north of Edna May, and we're trucking as quickly as we can down into the Edna May plant. And Tampia is on track for production in FY22. Symes Find is much earlier stage, still being drilled and evaluated, and comes later in the mine plan in any case. The current throughput through the Edna May plant is 2.7 million tonnes. Similar to Mount Magnet, they're both below $20 a tonne. We've got the advantage here at Edna May that we're on the state grid. A slide each on our principal projects. The Penny project, we're doing all we can to get one of Australia's highest grade gold mines into production. Completed acquisition of the asset effectively in 5 months, which culminated in a 15-gram resource. We have a similar reserve grade. Completed the feasibility study at the end of last month. We're able to reduce our all-in sustaining cost to $633 an ounce. The upfront capital went up slightly, and that's basically a reallocation between OPEX and CAPEX, notwithstanding very attractive MPVs at a conservative 2,300 or a closer to spot 2,650, where it was at least 3 days ago, gold price. Very handy IRR, short payback, approval processes are underway, and we're looking to commence mining late in the June quarter. What that's meant is that we brought some capital into FY21 from FY22 that wasn't there previously, to the tune of $16 million, and it's quite small, but it's highlighted there in the table under Penny project. And importantly, we've recommenced exploration drilling in September at Penny after a 3 or 4 month hiatus due to COVID, and we're looking to put some results out over the coming months. At Eridanus, we had so much success with the stage 1 pit. You can see in the center of the photo that we started the stage 2 pit in June of this year, and we're also looking to deliver on an underground mine below that 230 metre depth of the stage 2 pit. And you can see some of the drill results there suggest that the ore body at Eridanus is getting thicker and higher grade with depth, which is always nice. At Edna May, we've recently, along with the Penny feasibility study at the end of October, we announced a fairly significant increase to the resource at Edna May of 1 million ounces. There is a combination of high-grade lodes that we're mining at the underground, surrounded by a lower grade resource. The indicated resource has been extended down to 480 metres below surface, and the inferred resource extending another 60 metres, well below the current mine plan that you see on the right-hand side. The underground study has progressed, where we're comparing a bulk option to the current high-grade load only methodology. But what we've realised is, due to the potential interaction with the stage 3 pit, we need to consider both underground and stage 3 altogether. So we've pushed out the delivery of results of the underground study to match the stage 3 study, which is the end of this year. At Greenfinch, which is right next to the Edna May plant and the stage 2 pit, you can see right at the top of the photo, things are going very well after we did have some environmental delays with permitting, but you can see by the fact that we've only cleared the minimum amount to actually get this pit in, and it's looking a treat. Reconciling very well against reserves. We're slightly ahead of our productivity, and as I said, we're minimising impact to surrounding vegetation, and that's following up on the earlier statement about our commitment to minimising environmental impacts.
Please cross to your closing slide.
Wow. We won the Digger of the Year award at Diggers and Dealers recently. I've obviously gone well over time. Happy to take any questions if you can email them through. Thank you for tuning in.